All right, let's get rolling. So this group, so everybody knows, is kind of an intimate group that meets weekly. And the thing is that in this business, there's a lot of people who want to learn, but they don't want to do the work. Whereas this group, I'm going to introduce Mike and Brett to you guys and vice versa. Where this group shows up, right? And it's similar to a prop environment that I came from, that Mike Bellafiore has created with SMB for 25 years. And Mike and I had a chance to meet like a year ago. And Brett and I did a live event like a year and a half ago. So I'm not going to give you guys their bio because I think a lot of you know who they are and they could talk a little bit more about themselves. But the one thing I always say when I do any event with Brett is that he's unique to me. Back in the day when I worked at a prop firm, 2 or 3 years in, the owner hired a psychiatrist that came in and worked with some of the top traders. And I was fortunately one of them. But what the guy wasn't able to do was relate to what we were doing. And there's where Brett is unique. He trades, he has traded, and he knows what traders go through. So when we were dealing with a guy trying to help us, we were helping him understand the business. And Brett's kind of got this two-prong approach and has become invaluable to the community and firms like SMB and everything else. Circling back to Mike real quick, he reminds me of a guy like the owner of my prop firm where these guys take risks. They're not just – everybody sees the glory of what money could be made by traders and prop firms. The risk that these guys have to take and manage. They're managing their firm's risk, each individual's risk, employees and everything else. And so you truly don't know what guys in their position go through unless you've done it. Managing risk of someone, your own is tough, someone else is even tougher. So they know what the work ethic and things like that are involved in it. So really quick, just to see if I have this. I should have put their names up. Brett and Mike from SMB. And then the title or topic is How to Advance Your Trading Performance in 19 Lessons from Winning Traders. So let me bring in Mike and Brett to come in. Said hello to you guys when we did the sound check. Take your time to now share your screen, and then you guys could get going and take it away. And at the end, if you don't mind, maybe we'll do a Q&A, but we'll keep it within an hour so we don't keep you too long. But I really appreciate you guys doing this. I know everybody does, but truly I do because I can never stop learning, let alone other people. So thanks again for doing this.
Well, thank you. We really appreciate it. And if you could turn it over to us now.
Yeah, I think all you have to do here, let me, you could take it from me. I think that the same way you took it last time, you could do it this time. Let me stop my share. And you remember how you pulled it up last time?
Yeah.
Yeah, just do the same thing. There you go. We see it. Looks good.
Okay. Before we start going through the slides, let me just add to something Anthony said. Anthony kindly mentioned my background not only in psychology but in trading. Mike obviously has a background in trading, but also is a very active mentor within SMB and outside of SMB, actually. And so it's that combination of the psychological coaching and the mentoring that helps provide the perspectives that we'll be sharing with you today.
All right, great. And I'll actually add something about Dr. Steenbarger, Anthony, that I find to be something I don't think a lot of people know or would guess, which is the work that Dr. Steenbarger does with our traders is first invaluable, but it also has most to do with helping traders find their edge or clearly see where they do not have edge, as opposed to, I think, what people traditionally think a trading psychologist does, which is fix people. It is from my seat, it has been more about getting people to understand their strengths and building from them and allowing them to move away from their weaknesses, which if you are trying to build from your weaknesses, are going to be very frustrating.
That's well said.
So we'll talk about the goals for today. We'll introduce what's working here at our prop firm. We are a proprietary trading firm in New York City. And so what that means is that all of the traders that come in here trade firm capital. Many of the traders come in, they start and they go through our training program, and most of the traders are supported financially and through training through that time period. We are very selective in who we hire, and it takes time for guys to build into the traders that move the needle for the firm's profitability and for themselves. Dr. Steenbarger, I'm sure, will share the success that he sees in working with elite traders around the world and in many different products and doing many different types of different things, and many different types of trading that you interface with. We'll introduce some of the successful traders from SMB. I want to spend a lot of time, particularly as we're coming into end of year, and this has been a lot of what I've been reading about recently and what I've been sharing with guys on the desk, encouraging guys on the desk to be reading about recently, which is about habits. And I'll talk about that and how you focus on building a process, a daily process for yourself that really makes a big impact on your profitability and on your trading improvement. We spend a lot of time internally here thinking about how do traders build an infrastructure for themselves, a daily routine for themselves that's going to help them improve the most. We'll hopefully provide some ideas. We'll be sharing these best practices that we use here. And hopefully you will take away an idea or a couple of ideas that, as Anthony says, you guys are the most serious in his trading community. You'll put to use and start working on that. I'm happy to take any questions along the way. So a big focus of what we've been talking about recently is habits. And in his book, The Power of Habit, the author outlines how habits work and how to form new ones. And every habit has 3 steps: the cue, the habitual action itself, and the reward. Every habit has to have these 3 steps. And Dewey gives the examples of brushing our teeth. The cue is going to bed. The action is brushing our teeth. And the reward, yes, there's a reward, the tingly sensation that toothpaste leaves you. While it's almost insignificant in the grand scheme of things, it's enough to motivate you to brush your teeth. And I know, Dr. Steenbarger, you've talked about this in the form of being disciplined. And so often you're asked, well, how do you become a more disciplined trader? And you use the example of driving and how discipline oftentimes is putting in the best practices and making them into habit, which cause you to see your best results as a trader, to see your most improvement as a trader. But I laugh a lot of times about how you describe this, but discipline, as you've said in the past, is not necessarily this remarkable thing when you relate it to things that you've made into habit, like driving. You get in the car and you are able to stop at a stop sign.
Sometimes, yeah. That's where I would differ a little bit from Bruce's quote here, while it's about the tingly sensation of the toothpaste and how that is, quote unquote, enough to motivate you to brush your teeth. I think the whole point of habits is you don't need external motivation in order to do what you do. And so, for instance, yes, getting in the car and driving. I drive a stick shift. And so I've got a couple different pedals and I got the shifter, and I do the right things. I downshift when I need to, I have shift, at the right times. And it's all from repetition. It's become a habit. And there's no tingly sensation. There's no feedback in a positive way. It's simply because I've internalized all of that. And I think that's really important, that if we're relying on quote unquote motivation to do the right things, then sometimes we're at high energy, sometimes we're at low energy, sometimes we have more motivation, sometimes less motivation. But I could be at low energy and I'm still going to drive my car the right way. I'm still going to brush my teeth the right way. I'm going to do the right things because the habits become internalized. They become a part of us. And so that's what we want to do with best trading practices. Literally internalize them, make them part of us.
So if you're a trader, we often hear this from traders, and they'll say, I'm having trouble adhering to my stops. And this is an issue of improper discipline. When we think about a daily process internally here at SMB, we think about, hey, all the things that you should be doing on a daily basis to improve your skills so that you can get better. But when you turn those effective best practices into habits, you don't sit around and think you're remarkable after they become habits from doing them. Maybe somebody from the outside would. But if you're a trader and you're focusing on turning into a habit, adhering to your stops, and you get past that, well, it's not necessarily going to be very difficult after you've committed to that and you've internalized yourself as a trader that hits out when your losses are triggered. And I want to talk about recently the work that James Clear has put up in Atomic Habits. And, internally, we've been talking a lot about effective best practices turned into habit that experience the power of compounding improvement determines your trading improvement. So if you want to get better in 2019, it is about you putting into place the effective best practices. So at SMB, that means doing a playbook trade every day of a setup that made the most sense to you. At SMB, that means watching back tape at key moments in a stock or stocks you were trading and watching to see if you can see cues that the stock was going to do what it did from the tape, so you get better at your tape reading skills. And at SMB, that means taking the time to be properly prepared before the open. And at SMB, that means doing your daily journal, specifically putting your trading stats into TraderView. So uploading all of your trades into TraderView and spitting out those trading results in TraderView, and then making notes in Trader Journal form in TraderView, so you have that running total. Here at our firm, that means doing a daily report card, an idea introduced by Dr. Steenbarger to top traders at the firm. What's the one goal that you have for the month? For a lot of traders, that means getting rest, getting your exercise in, doing your mindfulness training, talking to other traders at the desk about trades you're also in, and creating this daily improvement plan, taking these effective best practices and turning them into habit, and then letting them compound. And let that power of compounding start to show you the results of improvement. So if you're sitting there and you're listening, or if you're in the room listening and you want to do better in 2019, what is your infrastructure? What is your daily process so that you are going to improve. And for us here, those are the bare minimum of things that we expect you guys to do. You should be doing way better than the minimum. But doing that stuff and letting that work compound, and then and only then will you see the improvement that you deserve.
Hey, Mike, real quick, I think what you say is unbelievably important to everyone, and it's so hard because you guys have, if someone doesn't do what you're telling them to do, you throw them out, they're fired, goodbye, leave. But so many traders, and this is what I tell my group, I'm not backing these guys, they're backing themselves. And they're in another room where they could actually talk and create kind of a live environment. But I tell them exactly what you're saying. And in an early lesson I did like 4 years ago, I said, here's some things that you have to do. Blah, blah, blah. And I said, and if you worked for me, you'd do them. And someone says, well, what if I didn't? And I knew this guy was going to last. I said, if you worked for me and you didn't, I'd fire your ass. And he was like kind of taken back. And it's like, listen, you got to respect the money you're trading as if it's your own, even if it's not, 100%. And it shouldn't be a trick your mind type of thing. I traded a firm's money for 8 years, and never did I ever think, well, only half of it's mine or my risk, or 25%, whatever deal you end up going on. But that's so important, and what's missing with people who don't have accountability. Not too much pressure of someone on them, but boy, you got to do these things. I was just telling guys today, what athlete, what performance sport plays the game and then doesn't do anything until the next game? It's silly. There's some sort of routine. So that was well said, and I just wanted to underscore for people who don't have like the accountability you guys provide to your guys.
Good. I'll just add one little piece of perspective here with respect to habits. We cannot achieve greatness in anything we do without doing some things greatly every day and every week. I'm not going to have a great marriage unless I do some great things every day and every week with my spouse. I'm not going to have a great trading career if I don't do some things greatly with respect to how I plan for opportunity, how I manage opportunity. And so as we look at creating habits, think about what are we doing that's great? Not just checking a box, but what are we doing superlatively that builds that sense of greatness over time?
And so for those who are struggling to form really good habits, this is a really good book, really good techniques about how you develop habits. You'd be a little bit surprised when you dig into how you form habits, how you can come up with an effective way to do so. So in 2019, you want to get better. And a huge way that you can get better is to consistently and with process increase your sizing. And here's the key part, from your edge. I work with traders who are underperforming. I work with traders who are doing really well, who want to do better. I work with developing traders. Even an underperforming developing trader, almost all of them, has some goodness in their trading. Even the guys who aren't making money. And you want to go through your trading stats into end of year and understand exactly where you're making money, exactly what those setups are, and really study that and come up with plans to trade them bigger. And in 2019, you want to continually be doing that. But I bring this story up from Swang, and I like to tell this story. This is a picture of him at a holiday party where he's getting a black shirt. You earn a black shirt at our trading firm if you make $2 million net in trading profits for the year. That's not cumulative over the course of your career. That's not gross. That is north of $2 million as an active trader in trading profits. And Swang, you've known him since the beginning of his career. 5 years ago, he was a consistent trader making $4,000 to $8,000 a month. And he has, over the course of time, mostly gotten bigger in his edge, consistently and with process, traded bigger and bigger and bigger and bigger. And I do think there are developing traders out there who sometimes don't make enough of the edge that they have, or they're not impressed enough with small profits in certain types of trading. And this is an example of somebody who, he was a scalper. If you talk to a lot of people about scalping, that's not seen as the most sophisticated type of trading. You know, certainly nobody would have us go on CNBC or Bloomberg to talk about this great scalper that we've developed. It's not what anybody talks about. Certainly the Wall Street Journal wouldn't be writing about that. But this is a person who achieved that success just from a small niche, just from small edge in his trading and building and building and building it.
But he knew what his edge was. And I think that's the important part here that Mike is emphasizing. How can you size up your specific edge if you haven't consciously identified for yourself what that edge is? So I can tell you in my own trading, what I'm doing is decomposing every time series. I trade the S&P futures, decomposing every time series into a linear trending component and one or more cyclical components. There's one or more dominant cycles. And I break it down so that I'm entering at the bottom of the cycle for an upside trend and vice versa. So using the cycles for the timing to go with the trend. That's a simple explanation of what I do. Well, I need to have what's called a stationary time series in order to have stable cycles. Now, when the market first opens, when the stock market first opens in New York at 9:30 in the morning, we get all these new participants participating. It's not a stationary time series. It's not a stable time. We have all these new participants coming in. What do you think my profit loss looks like for trades that I place, let's say between 9:30 and 9:45 New York time? What do you think my cumulative P&L looks like? People are shaking their heads, pointing their thumbs down. Okay, well, you know where whale shit is, right? That's at the bottom of the ocean. It's somewhere below there. That's my cumulative P&L between 9:30 and 9:45. Seriously. No, I've dived under. I've checked out. It's down there.
I always learn these psychological, technical terms.
That's right. Yeah. So
We just jotted it down. Whale below.
Good.
Not
Yeah.
whale shit, below whale shit. I've been down there too. I'm surprised I haven't seen you.
Yeah, we all been there. I can tell stories. So happens to be a psychologist who grew up in Appalachia. But anyway, so what happens from 10 o'clock, 11 o'clock, all of a sudden we do have that stationary time series, and my P&L looks much, much better. So I know what my edge is, and I know what my edge isn't. And with that information, I know where I can size up, and I know where I shouldn't be trading. So it's that conscious identification of what you do and why it works. If I can explain it to someone else, then I really know it for myself. And that allows me to do the right things and turn those into habits.
One of the things that sticks out listening to you speak in the past, and I remember this hitting home to me. It was a lecture you did in Chicago, where we were both doing an event separately, and I remember going to your event, and so and I've been trading for a long period of time, and so I can look at the different trades that I make, and I can say, okay, here's where my edge is clearly, and here's where I don't have so much edge, and work from those numbers. Developing traders oftentimes aren't sure exactly where their edge is or where it can come from. And I thought one of the things you said, and new traders, we have new traders in the room, and I'm sure they're like, I don't know where I'm going to get my edge from, and I'm not sure which one of my setups is going to have a statistical edge. And I'm sure people listening struggle with that as well. You know, I'd love to be able to build from my trading with edge, but I don't have it. I'd love to build from my strengths, but I'm not sure what it is. But I thought the key that you said, and it really hit home, was for you to merge your trading with the successes you've had in the past, for you to merge the type of trading you're doing with your cognitive and your psychological strengths. And so for the trader, it's not just looking at the type of trading that you're doing and measuring your steps, but just think about what type of trading should you be doing? What type of trading could you be successful at? What have you succeeded at in the past? What are the variables of why you were successful? And does that match the type of trading that you're doing now? And I know you work with some great traders and doing lots of different things. But how does somebody think through that when they're developing and they're new?
Yeah, it's a really important point. You know, when I think of portfolio managers I work with in hedge funds and successful traders, yeah, the very successful ones are very good at some things. They have some talent, some ability that has shown up even before they started trading. It may be a quantitative talent, it may be a fast thinking talent, but they have some ability that really stands out. And almost always their edge in trading is leveraging that talent. So as a psychologist, I can listen to someone talk, and anyone who is in the room listening would think that the person I'm talking with is bringing up 10 different topics. They talk about what's going on at work, they talk about what's going on at home, they talk about what's going on with their friends, they're talking about what happened in their past, and they're just going from topic to topic to topic. I can quickly see the psychological theme that unites all of those. To me, they're talking about the same thing. It just has many different manifestations. But I can see that theme. I've worked with enough people to be able to do that. And that ability to see a theme, to see a pattern across different presentations is exactly what I'm doing in markets. It's exactly the same, except instead of having someone talk to me about 10 different things, you have a market that's talking to you doing 10 different things, but there's a pattern to it. So it's leveraging that ability. Could I be a good scalper? Do I have that kind of fast thinking, fast acting ability? Absolutely not. It's not a key talent for me. You will make your money by leveraging something you're really good at into your trading. And that's where the edge comes from.
Yeah, and for me, the questions were, should I be doing fast trading, fast thinking trading, or slower types of thinking?
Slow and deep.
Should I be taking on a lot of risk, or should I be more conservative in my approach? And you want to work through. I won't go through the full analysis, and then sort of say, well, what have I been successful in the past to help you answer those types of questions. What product should you be trading? So I found that very helpful.
Very good. Yeah, and that risk-taking is a good example. In my own trading, just like in every other part of my life, I like zero drama. Absolutely zero drama. I don't want a marriage with a lot of ups and downs. I don't want a career with a lot of ups and downs. I don't want trading with a lot of ups and downs. I want consistency. And that's just how I'm wired. I function best when I have that kind of stability. And so how I manage positions plays to that. So yes, I take losses more often than I would like to, but there's not any drama associated with them.
Yeah, so if you want to be somebody who, if you need to be somebody who's more consistent, fading and trying to catch the tops in low float stocks may not be the best style for you to trade. You may be better off waiting for the backside trade in more of a larger cap stock. For people that trade the futures, you may not be the type of person who wanted to bet over the weekend whether or not the dinner,
The G20,
the dinner between Trump and China would be positive. If you are a risk taker, one of our traders was really long. Was really long. One of my partners was even longer than that trader. And that they are natural risk takers. And then there's even gradations between one of my partners and one of our top traders. One of our top traders hedged his risk a little bit more and had better execution for taking that risk, was in a little bit earlier and used options a little bit more. So those are very real things to be thinking about. As a rule, bump risk and size 20% after a significant period of success. That depends on the type of that depends on your time frame for trading. All right, mindfulness. We had a interesting chat here yesterday. We had an expert in meditation jump in and talk to us about his work. I know you guys sit through this. I've been talking about this and exposing you guys to this mindfulness training. And I'm reading a book right now. It is the biography of one of the co-founders of Nike, Phil Knight. And really, really good book. And in it, his track coach at Oregon, Phil Knight ran track at Oregon. The legendary coach of Oregon is Bill Bowerman. He's also was the co-founder of Nike, and he wrote this book, Jogging. And the time that he wrote this book, Jogging, people didn't jog. That would seem absurd right now. People didn't exercise. That would seem absurd right now. But when I was younger, it was really quite a thing to be exercising, to go to a gym or to jog. That was unique. And now that's become commonplace. And we were talking about this yesterday. We are digital athletes. We are data consumption athletes. The amount of data that you guys have to consume in your generation, as opposed to when I grew up, and I was saying this to the guys, when I grew up, there was nothing fucking to do, okay? You couldn't get in trouble, okay? You would go outside in your backyard and you would hit rocks. And the only way to get in trouble is if you had really bad luck and hit somebody's window, really far away. And that was almost impossible to do because the houses weren't that close to each other. But when I was young, we didn't have, I'm becoming one of those people, but when I was young, believe it or not, we didn't actually have cable. We didn't get cable until I was a teenager. And, there wasn't anything to watch. There wasn't anything really to do for the most part. You would go outside and shoot hoops, and I think that's partly the reason why we shot hoops so much in the cold, was because there was just nothing else to do. And so, that's not true today. And I actually look back fondly on those days where it was just calmer and you could kind of think, and there was just more time and you weren't so stressed to consume data like you guys really are. And so my thesis is, and maybe I'll be right, maybe I'll be wrong, but my thesis is that mindfulness training will be as accepted for this younger generation as essential to our health as exercise is today. And you do need time, and as traders, how are you judged? You're judged by your focus in real time. You're judged by your ability to process information with an open mind. You're judged by your patience to wait for the opportunity that defines your playbook, your patience to wait for your trades, and your aggressiveness when you see your trades presented in marketplace. That's how you get paid. And so to be able to do that, to have the training that allows you to have better focus, that allows you to have more open-mindedness, that allows you to be more patient, that allows you to have more self-awareness. Oh, I'm way too biased that I think the market is going to sell off. I'm way too biased that these marijuana stocks have to go down. That is a good best practice to be incorporated into your daily routine so you can make better trade decisions in real time.
And I think the important point that Mike is bringing up is that meditation, mindfulness work, biofeedback, all of those are forms of exercise. If we are trading throughout the day, we need to be able to sustain focus. Many trading mistakes are made simply because we lapse, our concentration lapses, and we end up doing something impulsively because we're not, our frontal cortex is not fully involved in what we're doing. So literally, you're training yourself to sustain focus with meditation work. And over time, you can become really good about keeping in the zone, which is a tremendous edge in and of itself with respect to active trading.
And you've been writing a lot about this recently, doing some excellent work on this, about how traditionally people think your optimal state is to be calm. And traditional trading psychology talks about being in the zone, and that's how you should be. And when I first started trading, the training program was to trade on a demo for a week, and then you would trade live. So you would trade on the demo for a week, and then they would sort of throw you in the deep end. And during that week where I was trading on the demo, and this is back in the 90s, I observed all of these traders cursing and screaming and banging and breaking keyboards. And I remember saying, how unprofessional. And then I started trading live, and I started having those very real emotions that those traders are experiencing. And I'm not advocating banging and cursing and breaking keyboards. And I would fully admit that we could have been more sophisticated back in the 90s. Did you see that at this firm?
Totally. Well, I was teaching full-time at a medical school, and so a trading firm interviewed me to work there full-time. It was after I wrote my first book. And so I'm walking into the office, and I'm passing an open door because the traders had their own offices, and this computer mouse comes flying out the door, smashes against the wall right in front of my face, and this trader yells out, "Pay me out, you fucking whore!" Well, I look into the office. I don't see any whore in there, fucking or otherwise. But he was clearly actively involved in his trading at an emotional level. And, you know, obviously in medical school, I didn't see that. And so the first thought, this is a true story, first thought that goes through my mind is, this is a place I'd like to work. Which shows how messed up I am. But in reality, that disrupts a lot of trading and the ability to stay focused, even when markets are not cooperating. A huge advantage.
Ryan helped me out this morning. I wanted to, my thesis was to short SPY today. And particularly after Trump came out with a tweet that clarified that the 90-day period for the U.S. and China to negotiate was going to be from the day of his dinner. Yesterday, for those of you trading the futures, we gapped up because the news initially was seen as more positive and had been baked into the cake. And then we sold off a bunch, but we rallied a little bit from the down move from the lows because Larry Kudlow came out and said, no, the 90 days is going to start at a later point. And so then Trump comes on and re-clarifies that no, it's actually going to start at an earlier date than what the market had thought into that rally. So my thesis was, we're probably going to go back to and a little bit lower than our low points from yesterday because we've got more negative news than the street was expecting about the time frame for negotiation. Does that make sense? And so I got short and then pretty early, and then I got worked out of a position in an opening range. I covered, and I remember that Ryan had said, you know, where I covered, I remember Ryan had said that this was actually the 2-day VWAP area of resistance where I was covering. So on my intraday charts, we were a little bit above the opening range, but using 2-day VWAP, we were right at resistance. And so I covered, and then I immediately said to myself, I've made a mistake. And I am overreacting to the intraday opening range. My thesis is still intact. Let me short this against the 2-day VWAP again. And if it gets above there, I'll cover it. I always want to trade with an executable stop. And that's fine if I'm wrong. Definitely could get myself, but I have made a mistake relative to my trade idea. And there was some weakness up there, I thought, a couple of times. And so I put the trade back on. Lo and behold, it worked. But it was my mindfulness that I had made a mistake, and I was able to correct it.
You became your own observer at that point.
Yeah. Mm-hmm. I was observing it. I was literally observing myself saying, that is a suboptimal stop that you've taken there, Mr. Mike. And you need to put the position back on and cover it and give it a little bit more of a stop. So good place to start for mindfulness training. Not suggesting this is the only place to start, but we suggested the guys here is to go to Headspace. They have a free training program. You can start with 10 minutes each day. There's a bunch of different programs. There's a trader who we love in the trading community, Trader Gus, who calls me a mindfulness piker because his mindfulness trading and his meditation practice is so far above what I'm suggesting here. You can get really into this. One of the traders on our desk will spend an hour plus a day in meditation and mindfulness. And our observation has been if he doesn't do this, he's a much weaker trader. I'd go so far as to say if he doesn't do this, he's not a profitable trader. If he does do this, he is a profitable trader. So some people this is really important for. So a good place for you guys to start. Really good app. All right. And I know, in Dr. Steenbarger, you do something similar to this with priming. You do something to this, sort of preparing yourself to have a productive day. It's part of your routine,
which is different from mindfulness, but it's activities that get me grounded, activities that keep me focused. And some of it is physical exercise, and some of it is quality time I spend at home. Some of it is reading and meditating and so forth, a spiritual activity. And all of that puts me in a certain zone. And I think it's priming in the sense of getting into the mindset, the emotional set that is most helpful for the type of trading that I do.
This is an idea that Dr. Steenbarger suggested to our traders, the daily report card. And this is an exercise we work with the top traders. Dr. Steenbarger, how do you find this exercise to be helpful for traders?
Yeah, and for an active trader, it would be a daily report card. There are people I work with who do monthly summaries. It depends how active you are as a trader, but the idea is every day or every week or every month of your trading, you are using it as an active learning experience. So the report card is you grading yourself in the various areas of trading. How good were the ideas that you came up with? How good were you at finding opportunity? How good were you at sizing positions? How good were you at managing the risk? So you're breaking trading down into components and giving yourself a grade. And when the grade falls short, you're identifying what you did wrong so that becomes a goal to improve in the next round of trading. And when you do something really well, that becomes something that you highlight because you want to continue that the next day. And so the report card is just a structured way for you to evaluate what you're doing and how you're doing it so that you can steadily make improvements.
Working with technology is a picture of Team Shark and the guys on his team, and they are meeting after the close to divvy up responsibilities as to how they can use technology to alert themselves to the trades they want to take, building scripts to get them into trades that they really like the best, or working on some automated models. And we call this hybrid trading. If you're not incorporating technology into your trading with alerts, what are your favorite setups? What are the variables of them? Get alerted to them. Scripts, what are your favorite setups? These scripts get you in automatically to those trades, and then with discretion, you trade out of them. Tools to make better trading decisions. Dr. Steenbarger, you work a lot with PMs and traders who do a lot of interesting work on this, and then models. But what are your thoughts on tools to help people make better trade decisions?
Yeah, we're seeing this not just with day traders, but with portfolio management teams, much more use of quantitative analysis to help them identify areas of opportunity. And many times those quantitative inputs are used in a discretionary way to help with decision making. So I'll take a very simple example from my own trading. I know that if I run a 2-period RSI, and normally in RSI, we look at it with 14 periods. A 2-period RSI on a daily or weekly data, very often that captures a flush down, a very short-term oversold condition. And there are some nice forward stats on getting a bounce from those levels. And so that's a quantitative input. If we get a very oversold market, that goes into my discretionary decision making. So it's adding a source of edge to your existing source of edge. And when those line up, you can have some very good trades.
I'll skip this. So I wrote a book called The Playbook. There's an exercise we do here internally that helps you build your trading business. Guys do this in here, but essentially they're archiving their favorite setups into a playbook form, and they're compiling a bunch of these playbook trades and using that to build their business. Dr. Steenbarger and I have written a ton about this. We're getting a little bit short on time here, so you can read a little bit more about this. But I want to talk about this: measure, measure, measure your trading. Dr. Steenbarger, thoughts on the importance of keeping good trading stats and measuring what you're doing well and not well?
Yeah, I see it. You know, at SMB, you're using the TraderView platform, and I just see tremendous advantages in that. When a trader comes into a meeting with me and the statistics are all broken down, how many winning trades, how many losing trades, what's the average size of the winning and losing trades, when you put on a position, what's the average amount, the maximum favorable excursion, how much does go your way, how much heat do you take on your entries, the maximum unfavorable excursion, and adverse excursion. And so it gives all these statistics. It breaks down, if you tag correctly, what's your P&L for different types of setups? What's your P&L, like I was saying before, for each time of day, each period during the day? And so you can quickly identify what's working for you, what's not working for you. Are you getting better? The stats don't lie.
It was just, so I worked with one trader in Australia, and he was showing his stats by day. I found this fascinating. On Wednesday, he made 3 times as much on his second most winning period. And I asked him a question: are you thinking about increasing your risk on Wednesdays? And, you know, I can kind of see how that could make sense. Maybe he's getting a feel for the market on Monday and Tuesday and working into making better trades on a Wednesday. But these are the types of decisions that you can make when you keep really good trading stats. I don't know how we're on time.
Do some Q&A.
Q&A, Anthony, would work for us.
That's great. It's totally up to you guys. I don't want to keep you any past longer than you want to do it, so you tell me. I mean, we'll do Q&A, and that's fine. But this has been great. I mean, I'm listening to you guys talk back.
Good. Well, if you have some burning questions.
Yes, absolutely. First thing I want to say is that image you showed of the guy that had the black shirt, what really caught my eye is that the people around him they weren't jealous. They were happy for him. I could see that, and this is a group of guys that trade together. I'm familiar with a group like this, having come from that background. But anytime someone had a great year and you guys honored it with something physical, it's the people around them that might not have the black shirt that are like, this is cool. They were proud of them, right? That's
very true. That's very true.
That's awesome.
And I think they're also thinking that's going to be me one day.
Yeah, that's a great thing. Not the other way where people would say, oh, he made $2 million, he made $2.5 million. No, this is one of us. Good for him. And it's just cool stuff. That's really cool you guys do that. So Mark asks, and I hear this from people, and this just goes, and I'll let either one of you guys answer this, but Mark asks, what would you suggest as the best way to internalize best practices? Some could do it easily on sim, but then when they go live, it breaks down. How would you address that, Brett?
You know, my experience is if they go live in a gradual way, in other words, you start small so that the P&L, you know, isn't huge on the upside or downside. It really helps that transition. this is why keeping journals, keeping stats are important, because you have the stats on your simulated trading, you have your stats on your beginning live trading, and you can see how they're different and what you might be doing wrong. But normally you want to start small enough so that in practical terms, it takes the P&L out of the equation. If you're trading so that you can't make very much or lose very much, you're not going to be making decisions because of the P&L. You're going to be making them because of your rules, your playbook. And then you gradually grow size from there. Like Mike said, 20%.
That's all. Until I was able to have a risk or a sizing plan, you're not going to increase your size. You're going to get comfortable. You have to increase incrementally. So at some point, a 10 lot feels like a 1 lot. A 50 lot felt like a 10 lot, right? And you're not tripling your exposure, so you feel it and you look and trade less objectively, but gradually go up, and next thing you know, wow, I'm trading X, and it doesn't feel like it.
Yep.
You know you went up for the right.
Yes, and let me say something else. I think people focus way too much on sizing up their trading. I think while that's important, you also want to be broadening your trading. You want to be finding new and different sources of edge, not just size up, one particular type of edge, because eventually all edges go away. And so just when you've gotten to the point where you really sized it up, it does violence to a certain part of your anatomy. So what you want to be doing is developing new sources of edge in addition to sizing up the ones that are working so that you are diversified. And we're seeing that among the most successful traders. Here at SMB, I talked to several of the ones who have been in the 7 figures this past year, and everyone is innovating. Everyone has innovated this year, is doing something they hadn't done the year before.
That's
so
awesome.
They're not just getting bigger, they're getting broader.
That's collaboration, right? I mean, that's sometimes you're forced to broaden yourself. Just
collaboration, innovation, just like building a business. You don't just build a business by selling more and more and more of the same one thing that you sell. You broaden your product line, you broaden your distribution. That's how you get bigger.
No, that's an awesome point. Robert asks, what is the difference between mindfulness and meditation?
Meditation is one path toward mindfulness. Mindfulness is a state in which you are self-aware. You're a better observer of yourself. And meditation is an activity that can lead to mindfulness. There are other activities that can promote mindfulness. I have written quite a bit about biofeedback, which are devices that give us feedback about our brain waves, about our galvanic skin response, about our heart rate variability. And we can use that feedback to adjust ourselves mentally and physically so that we stay in the zone, and that can lead to mindfulness. So there are many different activities that can make us more mindful. Meditation is a popular way and quite an effective way.
This is a question I have, and you don't have to get into detail, but what platform do your guys use, Mike? Is it a proprietary platform? I know Merritt uses Sierra because I've spoken to him about it. Is that generally what most of your guys use?
It is. We have a proprietary platform for equity trading at the firm. We also have automated trading tools for traders here. You can back test and front test and run live a particular strategy from your desktop. We do use some third-party platforms for other types of trading, but for equity trading, it's in-house. You have to be part of the firm, and only traders of the firm can use it.
And you've been around for how long? 25 years, Mike?
So I I was going to say I've been around for 48, actually. I've been trading since 1997, 21 years.
But SMB has been around for almost
I'm
that
sorry,
long also.
SMB has been around since 2005.
Oh, okay. I thought it was even longer than that. But that's great. I get from this conversation what we don't have in most traders' environments that you guys recreated through your program, and I recreate through a team room where guys could talk and listen, is, and you brought this up comparing generations, that if at some point you're not human, it's going to be hard to be great, as you put it, Brett, because what that means is, are you just texting and emailing to communicate, or do you actually have human moments of talking and listening? Like, I find it hard to listen. I found it easy to listen to you two guys today because it was interesting. And then when you put yourself in the dynamic that you guys do face to face, man, that's just, we'll never get away from that. Is no matter how many generations get used to just texting and emailing to communicate, I think we'll never get away from. Great things won't happen alone. They only happen with relationships. And not all communities are good, but you need a good community to do great things. Like that one young guy that you had on there that made $2+ million, could he have done that by himself? Probably not. But boy, with the power of others, right, is just, it's where great things happen, right, bro?
It's the power of influence. Some interesting research on that. When you're working in teams, when you're working as part of a community, people can influence each other for the better.
That's awesome. So you had at the bottom of your slides, you've got a URL, smbu.com/daily video. If you guys want more information from Mike and Brett, or their email address, info@smbcap.com. Is there anything else you'd want to direct guys to if they are looking for more info, Mike?
The only other thing would be the blog that I write, Trader Feed. It's traderfeed.blogspot.com, which deals with issues of trading and trading psychology. And on the index page, I also link the Forbes articles I write for the financial publication.
That was one thing I remember about you, July of 17, when we did that live event in Chicago, is you gave everybody your email address. And I see Mike is doing it now on the screen, and that's cool. I mean, that's access. And I heard a long time ago, and I do it and always try to do it, is that important people are important because they're available. If you want to pretend like you're important, you're like, no, I don't have time. But what's cool about you guys is that you're available. You're not trying to run away and say, I'm too busy for that, or too busy for that question. And that's, to me, that's the definition of being important, is you're available and accessible. So I really appreciate you guys.
And on that note, Dr. Steenbarger has to go.
Yeah.
I'm giving my email address.
I got to get the hell
email
out of
address
here.
is on the Trader Feed blog, and I do welcome questions and observations. Sometimes people share ideas, and I share ideas with them. It's all good.
No, that's awesome. I really appreciate you guys doing it. Have a great rest of the week, and Merry Christmas and Happy Holidays to,
Thanks, guys.
to both of you
Appreciate
guys.
it.
Our
Thank you
pleasure.
very
Happy holidays.
Thank you. Appreciate it.
All right, see you soon.
All right, guys. I'm going to just cut the recording and cut the screen. But thanks again to Mike and Brett. I mean, that was awesome. I always judge an event and guests by how much I liked it, and generally I like them all. But this was cool. I mean, it kept my attention, and I know Mike a little bit, and I know Brett a little bit more. And this was really great. So I did record it, and if they don't have a problem with me sending it out, I will. I'll talk to them later. But you guys have a great rest of the week. And for people that come to these Tuesday sessions, just kind of a housekeeping mention is that we're not doing them until the beginning of next year. But stay. You'll get contacted that way. These regular Tuesday sessions we end at some point in December. This was a great way to end them. We'll restart them in the middle of January, but pay attention to your emails and everything else. So Thanks again, guys, for coming. Thanks again, Mike and Brett. And we'll see you guys, most of you guys in the room tomorrow. All right. Thanks again, guys.